What's going on, everyone? Welcome back to another trade recap. Today I took shorts on gold and made $377 across two accounts, and this is how. So as you guys can see, my executions are here. So really it was a lot lower on the 3 minute. It was after the 1 minute. So here and then here. Okay, so pretty much the structure for today, definitely bearish. Okay, not a lot of times here. I'm just gonna turn this off. Not a lot of times that it's actually bearish, meaning that we usually go up in gold. Okay, but however, okay, today was extremely bearish just because we had this crazy move down. I think this this was a New York session. Okay, and we had this crazy move down, right? So what I was looking to do just when the new day opened was, obviously we had this move here that filled a bunch of orders, and then I was looking for Asian session to send the price lower. Okay, obviously we had this 1 hour that I was really looking at, and at the time I took this trade, we were still in this 1 hour, but we were probably at about like right here. Okay, we weren't exactly at inversing the 1 hour, but it looked really good. We were also in this 30-minute bullish fair value gap, and you guys might be asking, Mish, why are you shorting when we're in a bullish gap on the higher time frame? Reason is, this is very bearish market structure, meaning we had a retrace. I'm pretty sure we took out, honestly, we could have even taken out the 78.6% or whatever. We literally like edged it by a point. Yep. Okay, we edged it, but regardless, we had a really good rate chase, and then we had a 15-minute gap here that we obviously respect. Okay, now once we see this 15-minute gap and we have the retracement, everything that we're looking for, all I was looking for was the highest time frame inversion. In this case, it was this 5 minute here. So after we inverse this gap, I entered right here. I had my stops. Okay, so I could have had my stop here and then target this flow here. This was gonna be my full TP here, but I didn't want to risk $430 on this trade. I really wanted to risk something like 200, 250, because yet again, just don't want to risk that much personally. So what I ended up doing was, on the 5 minute, I put my stop loss here at the body of this candle. And again, I've talked about this in the boot camp. I've talked about this a lot. If we're going to have a strong move to the downside, meaning a strong bearish or a bullish candle, if you put your stop loss at the open of that candle, it usually does not get retraced. Okay, the reason I did this, again, I didn't want too big of an RR, and then we came up, we kind of edged my stop loss, and then we inversed this 1 hour, and this was my true confirmation that we were going to push lower. Break even was right here, just because I didn't want price to tap this level and then continue higher. But we literally perfectly got this here, and then it reacted up, and I really didn't like this reaction, because I thought that now that we had taken out this key level, right, even though we inversed that 1 hour, we could easily retrace into the more gaps now that we had inversed, and I just closed my position there. Overall, still not a bad day. This would have been a lot nicer of a trade, but again, you can't be too greedy now that you're seeing the outcome. Okay, so 377 x2 is what, like 740, 780, something like that. That's pretty much it. Really nice mish model in terms of, right, just move down, retracement, highest time frame fair value gap, which was like here. Take this trade, boom, boom, boom. It would have been like this. Take this trade, stop at whatever the 5 minute candle there, and that was like a 2 point something, like 2.3 RR, and for free, that's it. So glad you guys watched this video. Hope you guys learned something, thought process, execution, whatever it might be, and I'll catch y'all boys in the next one. Peace out.